Welcome to Tony Byrne's View, with news you can use. As a chartered financial planner and wealth manager, Tony's passion is to help you retire early and live the life of your dreams with no financial worries. Now to today's episode.
Which state pension will I get? The question, which state pension will I get, is perfectly understandable because state pensions are complicated and most people do not know the answer. Essentially, there are two state pensions, the new state pension and the old state pension. You'll be eligible to claim the new state pension if you're a man born on or after 6th of April 1951 or a woman born on or after 6th of April 1953. The earliest you can get your new state pension is when you reach state pension age, which is between ages 66 to 68, depending on when you were born. If you attain state pension age before 6th of April 2016, these rules do not apply. Instead, you'll get the basic state pension, in other words, the old state pension. The old state pension includes two parts: a basic state pension based on your previous national insurance contributions record, an additional state pension also based on your national insurance contributions, but this takes into account your earnings and whether you claim benefits too. The old state pension applies to people who reached state retirement age before 6th of April 2016 or who deferred their old state pension from that date onwards. Your national insurance record before 6th of April 2016 is used to calculate your starting amount. This is part of your new state pension. Your starting amount will be the higher of either the amount you would get under the old state pension rules, which includes basic state pension and additional state pension, and the amount you would get if the new state pension had been in place at the start of your working life. Your starting amount will include a deduction if you were contracted out of the additional state pension. You may have been contracted out because you were in a certain type of workplace, personal or stakeholder pension. Your national insurance record and your state pension. Your new state pension is based on your national insurance record when you reach state pension age. You usually need to have 10 qualifying years in your national insurance record to get any new state pension. You may get less than the new full state pension if you were contracted out before 6th of April 2016. You may get more than the new full state pension if you would have had over a certain amount of additional state pension under the old rules. You'll need 35 qualifying years to get the new full state pension if you do not have a national insurance record before 6th of April 2016. Which state pension will I get? The answer is either the new state pension or the old state pension. You cannot receive both. If you started taking your state pension after 6th of April 2016, you will receive the higher of the maximum old state pension or the amount you would have received under the new state pension. Whether or not you receive the full state pension is dependent on your personal circumstances and in particular the number of qualifying years for which you have received national insurance credits. Qualifying years if you're working. When you're working, you pay national insurance and get a qualifying year if you're employed and earning over £242 a week from one employer, you're self-employed and paying national insurance contributions. You might not pay national insurance contributions because you're earning less than £242 a week. You may still get a qualifying year if you earn between £123 and £242 a week from one employer. Qualifying years if you're not working. You may get national insurance credits if you cannot work, for example because of illness or disability, or if you're a carer or you're unemployed. For example, you can get national insurance credits if you claim child benefits for a child under 12 or under 16 before 2010. You get job seekers allowance or employment and support allowance. You get carers allowance. You're not working or getting national insurance credits. You might be able to pay voluntary national insurance contributions if you're not in one of these groups but want to increase your state pension amount. Gaps in your national insurance record. You can have gaps in your national insurance record and still get the full new state pension. You can get a state pension forecast which will tell you how much state pension you may get. You can then apply for a national insurance statement from HM Revenue and Customs or HMRC to check if your record has gaps. If you have gaps in your national insurance record, that will prevent you from getting the full new state pension. You may be able to get national insurance credits and or make voluntary national insurance contributions. So the answer to which state pension will I get is quite complex. It all depends on your own individual circumstances. A good starting point is to get a state pension forecast from the DWP online. You know it makes sense.
Thank you for listening to today's episode. If you enjoyed it, don't forget to share it with your friends and family. For more information, head to www.wealthandtax.co.uk.